Market update time. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alright, market update time. We're going. I'm losing it. Alright, so FOMC's been done, said, and gone. And all I have to say is Janet Yellen has run out of bullets. Janet Yellen, she can no longer push this market up. As you can see, especially in the last hour, actually, what actually happened is, you can see what actually happened here. We opened higher, and we're actually positive in the last hour. But the last half an hour, the sellers came in strong and closed the Dow low and all that sort of stuff as well. Now, that's actually a sign, very, very, very detailed, big sign as well too. And you can see once again, the volume is quite consistent. Lots and lots and lots and lots and lots and lots of selling volume on this down leg, and that just shows you that that volume is selling volume, not buying volume. And Janet Yellen, every time she speaks, she pushes the market up, but she didn't this time. That's saying that she's running out of ammunition. So I actually had someone I had someone make a comment just recently, and they said, "Oh, when the market drops and the volume increases, it's because everyone's buying it." Maybe, but the thing is that to me is more. If you judge that with the volume, you've got to judge the bar with the volume to determine that. So the bar analysis and the volume determines whether that's going to be as a buying action or not. For example, if you see a bar that looks like, let's just do this here. If you look like this here, the market opens here, runs down, comes up, and then closes there, right? So it closes slightly, and we have just say this is the volume here, increasing volume. Well, you'd say, yeah, there's a lot more buyers, there's a lot of people buying that because where the price finished. But you can't say, oh, because the market's falling off and there's a lot of volume, that's people buying into it. That's just a lot of rubbish. Because you've got to have bar analysis. So bar analysis with the volume speaks everything. So for example, if you get a bar that opens here, like it is here, opens there, runs up, comes down and closes at the low, and you get this volume spike here, that volume spike there, well, that's not people buying the market. No, the bar is opening, and the top 1/3 closing on its lows, and we get a volume spike. That's not saying people are buying that day. It's not a lot of people. We're not getting a volume spike because a lot of people are buying it. No, we're getting a volume spike because a lot of people are selling it. The bar's actually showing you. So when you read your bar analysis with that's actually showing you. Excuse me. That's actually showing you what is actually going on. So for example, today we're going to open here, came down, closed there, and we got a nice volume move. Now it wasn't a spike, but it was a nice volume move. Now, do we get close to average volume today, which is actually 94 million? Do we get that because a lot of people are buying it? No. What do we get that? Because a lot of people are selling this. Why? Because the bar analysis tells you what's going on. So you can see here the market open here, run down, and close there. So it still closed a little bit low, and we had this volume here. So is that buyer's volume or seller's volume? Well, you don't really know, right? You don't really know. But then you see this, when you see the very next day, you see this volume here. So as you can see, so as the market here opens here, runs down, closes almost near its lows, just off its lows, and you get this volume spike compared to this bar here. What's that saying? It's saying selling volume. There's a lot more sellers in the market than buyers. So you got sellers, and seller. You got the selling bar analysis because it's closing at its lows, and then when you start to get the volume, that one there and also that one there, when you also get the volume spikes and the bar analysis is showing you lower close, that's showing there's so many. Yes, there's probably people buying it. It's people, that's what makes a market. But there's so much more people selling it, and that's where the market comes into it. So if you're thinking that, oh, well, the market pulls back and we get a increasing volume because people are going to buy it, and you think this market's going to go up, then that's just to me right now, it just doesn't make sense. When the market rallies and we get a sort of volume, and then suddenly we start to get this down move and we start to get increasing volume, that's showing you that there's a lot more people selling into this market than buying it. If there was a lot more people buying this volume than selling it, this down move would actually have a decrease in volume, and then we would get an up move in the price, and then we would get an up move in the volume, showing you that this is where the market's likely to continue. Make sense? So that's what I do see there. So once again, the Dow Jones closed low. We've got a good volume there. One thing I noticed about my stochastics too, guys, is that last time we got this nice decent pullback through here, the stochastics actually ran down quite quickly before turning up. Right now, the stochastics, even though we got this nice move from that low to that low, 3%. The stochastics are pointing down, but they're still not even nowhere near our oversold here. So that tells me we have at least a couple more down days, and maybe big down days as well too, for that to happen. So you can see that's what happened on Dow Jones. Same with the S&P as well too. Got some really good volume there. See where the stochastics are. Let's actually just minimize that. But you can see what actually happened. What the overall S&P did. What did the overall S&P do? Well, you can see they had this support and resistance level. Now, what is that? Let's actually do that again. So this whole support and resistance level, and you can see that we actually have support, resistance, had lots of support, and now it's become resistance. That's a weak sign, guys, and we're getting this increase in volume as this market's come down. That's a very weak sign. So, guys, to me, we're likely to have some decent down days, some big down days coming real soon. Maybe tomorrow it's going to start. I'm not calling for a massive 2,000 point crash where that could happen, but I'm saying that the way this market's reacting right now, it's totally reacting on the bearish side, and it's struggling. The buyers are struggling, and there's lots of selling volume. I wouldn't be too surprised in the next couple of days that we actually start to see some big down days, probably even tomorrow, because everything's lining up for a nice big move, nice big down bar on the S&P now, because it's failing. It's continued to fail. It failed up here. You can see this high through here. The market poked its head above here, ran a lot of stops. I guarantee a lot of people are buying it up there. I know one. Fuzzy, where you gone? Where have you gone, Fuzzy? You've disappeared on me. You were so bullish up here. Now you're down, the market's down here, like, disappeared. So then the market's dropped off, and you can see the market actually failing at this point right now as well too. So the market's dropping down. So very, very weak through there. Same with the Russell. What actually happened with the Russell? As you can see, right, the Russell had this resistance point through here. The market actually rallied up and closed lower through there as well too. So the market's run up, come down, close low, and it was at this support and resistance level. You would expect that level to be at least a support, but it's rallied up and now rejected it. That tells me, guys, that we're likely to see this tomorrow. And the one that was a bit of iffy on the iffy side was the Nasdaq, because the Nasdaq is still at this level of support there. So I wouldn't be too surprised to see the Nasdaq actually breaking that and continue in this downward move and continue down, because it's just this, you're just getting these lower close. Moving on now to obviously the SPY. We've got QQQ, and we'll also go to the transportation average. Same thing, guys. The market opened high, rallied high, came down, closed low. But the overall transportation average, guys, you can see that the overall the transportation average is very, very, very weak. And I've been saying this for the last couple of weeks, how we're getting this bear flag, and we've got this double top formation, which is reversal pattern. There's the neckline. It broke it, made a low, ran up. We had these weaker buyers showing that the sellers like to come in. We made this lower peak, and now it's actually breaking down. So to me, guys, that just screams downside, a lot more downside to come from where we are right now. Now let me actually bring up a chart I want to show you here. Now this chart here that you're looking at is a chart of all the different indices. You got the Dow Jones over here, S&P, Russell, and the Nasdaq. And the reason why I want to show you that is I want to show you what is actually going on right now. And I've been talking about this for the last couple of weeks, and this is becoming more evident now. And I promise you guys that this is a sign of big downward movement to come. And I've been speaking on this for the last couple of weeks. And what is that? Let's look at the Dow Jones. We've had this run down, had to run up, and we had this run down, and we had this run up, and we had this run down, and we had this run up. And as you can see, that if you have a look at, the market made this lower peak, it had this lower trough, had this higher trough. Now we had this higher peak. Now that higher peak was at these, that it actually broke this support level, and it broke this support level as well too. So, and then what happened? The market broke up. So if the market was strong, you would expect to see the market just continue up. But did it do that? It didn't, did it? What did it do? It actually now continued down to here, where it is now. Now, what have we just created? We have now just created back to now a lower trough, right? Well, it hasn't formed a lower trough yet, but it will form a lower trough. The question is, does it stop here and rally up? I actually thought that maybe that could be a chance of happening with Janet Yellen speaking about the FOMC and all that news announcements, a chance of it happening. Now, we were at a positive, I think 40 points, 40, 50 points positive on the Dow, literally half an hour before the market closed. Sorry, my throat's just really dry. And so you can see the market came down, and so it was positive territory half an hour before the market closed. And then what actually happened is, for some reason, about 20 minutes to close, sellers came straight into it and knocked it down. So this actually could be a continuation move, and we could just continue getting this sort of action. That's wrong color. Continue getting that sort of action, as you can see. Right, now let's go to the S&P chart. Let's go back over to the S&P. What do we get here? We've got a run up through there, peak, got a trough, a peak, you got a trough, you've got a peak, you've got a trough, you've got a peak, and you've got a trough. All right, so just look at that line through there. Now, again, guys, look at this, what the market is actually doing here. If you go and have a look at the chart, you can see this was the high point, and I guarantee you there was so many people breaking up with this. And this is what the market does: has a false breakout and then drops straight back down. So you can see there was so many buys coming out of the woodworks just then, and I'm just saying, I don't think so. This is about to turn. And I was showing you the Russell chart and so on and so forth. So the markets broke down, but look at this here. If I go back to my line, you can see that actually this was a support level here as well too, and the market broke above that, and this was a support level as well too. So you had one potential support, two potential support, three potential support levels, which was right here. You can see that over there, which should have been this level should have been a support level here. Makes sense? So this area here should have been a support when the market bounced off. So the market should have bounced off and continued higher. But what actually happened, as you can see, that the market actually rallied up. It actually rejected off this line through here, came down, and closed right there. So this is now resistance. Guys, this whole market is weak. When you start to read the internals, this whole market is very, very, very weak. And the S&P and the Dow are now starting to show up. The Dow is the weakest. That's the first sign of a big down move to come. Now the S&P is breaking past all these levels, which should be, at least one of these should be a support, and now it's rejecting it and acting as resistance and breaking down. That to me is saying something. Let's go have a look at the Russell. The Russell had this area of resistance, as you saw, and what actually happened? Now it's forming, this whole area through here is now resistance. This was resistance, and it should have been, we should have had some sort of support here, but didn't. It broke through, and as you can see, it broke through, came down through here, and came back up, and now it's rejected off through there. So not too much on the Nasdaq. The Nasdaq's actually still at the support level there. So very, very interesting on the Nasdaq. But all these other markets are saying, look at this. This is actually quite interesting. So guys, I expect a lot more downside to come. And as you can see, this is exactly what I'm looking at through there. So anyway, guys, that's the market update for today, guys. If you are buying the market right now, you think the market's going to keep going up, then maybe you'll want to watch this video again. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course, and I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.